Bo Fisher, Fisher and Weens Wealth Management. I figured I'd send out a video to explain how I'm viewing the markets right now. We are in mid-February 2018, and we've had a very quick drop in the stock market. And I wanted to let you know how I'm feeling, why I think this market has dropped so quickly, specifically the stock market. About 2 weeks ago, Apple decided that it was time for their earnings, so they gave out how many iPhones they sold and what kind of profit they had in the quarter. It turns out that they sold just under 75 million iPhones, but they were expected to sell 75.5 million iPhones. Now, it doesn't sound like a big miss. It doesn't sound like very much of a difference, because it's not, but the stock market had been going up for a long time, as you know. And so there were a lot of people waiting for the red flag of a market turning. And so quite a few people viewed that as a turn. And then also I think their computers, the algorithms, saw it as a potential turn. So they started selling. As a matter of fact, the Dow Jones lost 1,000 points in 10 minutes. That's how fast the market came down. And over about a week and a half, the Dow Jones and the S&P, as you can see from this chart, lost peak to trough about 12%. And it happened very quickly. Now, if you zoom out a little bit on the stock market and look at a little bit beyond just a couple weeks, from this chart you can see this is a 2-year chart. And though at the very end on the right side of the chart you can see that drop we had, but it still only takes us back to about mid-December. So we only gave up in the stock market basically about a month and a half of gains. So we've still had an amazing run. And now the question is, well, what happens next? Well, as you know from my last video, I'm actually expecting a downturn, a recession to hit us in the near-ish future, because there's cycles that happen in the economy. I don't actually think that that's what's happening here. And now why I don't think that is because I'm a fundamental investor. I look at how much companies are making, and then I'd make a determination of what I think the stock's worth. And I want the fundamentals, the PE ratios, to be somewhere between 15 to 19, somewhere in that range. And think of it as an analogy. I use it as you go into a store and want to buy a t-shirt, and you want to spend somewhere between $15 to $19 on that t-shirt. If they're on the rack, the t-shirt is $30, it's overpriced. If it's $10, it's a really, really good value. So where are we today? We're a forward PE ratio of about 17, which is pretty fair. So we're not overvalued. Like in 2007 and 8 and 9, before that big recession hit, we were way overvalued. PE ratios were in the high 20s and 30s. That's not where we are today. So fundamentally, I think we're doing fine. Now, the media also has been trying to determine what just happened. Why did we just lose 12% in the stock market? And they're pointing fingers in lots of different directions. One of them is on interest rates. And so as you can see here from this chart, interest rates actually have been climbing pretty steadily. And what the concern there is that when, not in the stock market, but in the bond market, that actually is damaging. So when our conservative fixed income allocation in your portfolio, our bonds can actually be hurt. We can lose principal as interest rates go up. It's an inversely proportionate relationship between interest rates and bond prices. So we're keeping a close eye on that because that does affect a lot of you. Now, historically, you can see from this chart, we are at a very, very low interest rate scenario. And interest rates will go up. They just will. And even though it feels like they're rising, historically, they're still really low. And there's a long way to go. So we're keeping a close eye on that. So where are we? What are we thinking is going on? Well, we think it's actually a healthy thing for the market to drop a little bit. It got a little overheated in December and January, so it just pulled back a little bit. I don't think it's the start of a major recession. We are keeping an eye on one because we are expecting one in the future, but I don't think that that's what's happening here. So if you want to talk about this, if you want to talk about anything else, about investing or your finances, just give us a call. But until we meet again, enjoy your family.